All right, good morning, ladies and gentlemen. Welcome to MacroAce with your host, Tony, with another edition of the rate prep. Probably not going to be as volatile or as crazy, or actually the Fed rate decision wasn't that crazy, it's quite boring. But doesn't really get that much attention compared to the Fed rate decision, of course. But still, nonetheless, can be very important for the markets, as sometimes with the Bank of England rate decision, there are surprises, and it's kind of harder to tell what the central bank might do, considering what they've done in the past and how they've discussed about monetary policy and the decisions that they've made. So good morning to you all. All right, so Bank of England, just going to quickly do a little check here. Okay, so let's get into it then. So first of all, what is the rate decision? It is a rate that banks pay interest to, that the central bank pays interest to commercial banks. And why is it important? Well, of course, higher rates are made to slow down growth or to make sure that the economy doesn't get out of hand. If it's in certain pockets of areas, if it's with inflation or GDP or employment is seeing an overheating, any area where the central bank feels that the economy might be a bit too strong and will then could get out of hand, that's when they decide to raise rates. And of course, on the flip side of that, with lower interest rates, that's to do the opposite, to support growth and to try and drive up inflation if inflation is too low, and then, or if disinflation is too strong, or there's not a lot of growth that is occurring within the UK economy. And of course, it affects how banks hand out loans, mortgages, and credit, not just to businesses, but also to consumers as well. Then, where is the economy at the moment? So the unemployment rate was at 4.2% compared to 4.3%. The unemployment change at 20.4k compared to 0.9k. Average weekly earnings was at 8.1% compared to 8.5%. Inflation remained unchanged at 6.7%. Core CPI, a slight tick down to 6.1% compared to 6.2%. GDP quarter on quarter was at 0.2% compared to Q1's of 0.1%. GDP year on year at 0.6% compared to 0.2%. And services PMI data, which we'll be getting soon. Not today. We'll be getting that next week. Services PMI was at 49.2 compared to 49.3. And then the manufacturing data, which we had this week, which we had yesterday, so 45.2 compared to 44.3. Retail sales year on year was at -1% compared to -1.4%. And then if we carry on, retail sales month on month was at -0.9% compared to 0.4%. So just a slight correction for the manufacturing is at 44.8 compared to the prior 45.2. Okay, carrying on then. So then looking at the previous Bank of England rate statement, what was said. So there was a surprise no change decision. So the expectation was for the Bank of England to hike by 25 basis points to 5.5%. But the vote split was for 5 to 4 to vote for no change. So that's what caused a bit of caused extra volatility within the markets that some economists were maybe expecting. So it wasn't a complete total surprise, but nonetheless still a surprise to the markets. And then what they said was that evidence on inflation persistence was mixed, and that they will be sufficiently restrictive for a sufficiently long time to get inflation to target. And inflation is expected to decline significantly in the near term, despite rising oil prices service inflation is set to remain elevated. And the third quarter GDP is now expected to rise by 0.1% compared to August's estimate of plus 0.4%. And underlying growth in the second half of 2023 will likely be weaker than what they'd previously forecast. Bank of England's Governor Bailey also said that inflation has fallen a lot in recent months and that they think that it will continue to do so. So this was the previous sentiment before the last rate decision. And this is important to kind of understand as to where the central bankers lie on the hawk and dove scale. You can see that the last time round, the majority of members were leaning towards the hawkish side, towards the tightening point there. But if we go to the next slide, then that flips because of the 5-4 vote split that occurred at the last meeting. That's now flipped to a hold, and that's what is expected as the majority today. So this is quite important that in this, this is why I said the Bank of England, you can't really keep your eyes off of it. You've got to focus on that too. Because of the way that the Bank of England has surprised the markets in the past and how they've delivered their communication or talked about monetary policy in the past and the decisions that they've taken, it provides that opportunity to then be able to to capitalize on within the market. Of course, I'm not saying that it's all going to go one way or the other. I'm just saying that in the past, because of what the Bank of England has done, how they've acted, that there is that slight ambiguity that surrounds the Bank of England that then makes the market moves more volatile for the pound. So again, just to kind of go over again, so we've seen the central bank go from the tightening point, and then after the unexpected no change in the rate, sticking to a hold. And that's what most economists are looking at. And this is also important too, is what does the voting look like? So the voting is usually when you get the first vote and it deviates from what the expectation is, the market reaction is stronger. But then if you get the same vote again, time and time again, then you start to get the opposite that happens, where the market reactions start to moderate, and then to the point where you don't really get that much of a reaction. You get more of a whipsaw reaction. With the monetary policy, then that monetary policy statement becomes more important to try and look for other clues and to see if anything new has been said. Just like I said with the Federal Reserve yesterday, there wasn't anything new that the Fed had provided to the markets. Hence, you got a whipsaw reaction, and the reactions or the initial reaction didn't last that long. So that's one thing to be aware of, is if they do kind of stand pat, if the rate is kept on hold as expected, and the vote comes in line with expectation, maybe with a slight deviation with the votes, then that could mean that you don't really get that much of a reaction. But if, however, you still have a 5-4 split rather than the 6-3 split that is expected by economists, that could add some, provide some positive momentum. But how strong will that positive momentum be if the majority are still wanting no change, or voting for no change for the rate? So just something to keep in the back of your mind as to the different scenarios that could occur with the Bank of England rate decision. And then the comments from the central bankers as well, they don't really speak too much about monetary policy, or they sometimes repeat themselves quite often, as other central bankers do. But just some of the comments that I wanted to highlight from the central bankers. So you had Bank of England's Mann on October 9th that said that wage and price inflation are sticky downwards, and inflation volatility points to higher rates. Bank of England's Governor Bailey on October 14th said that weak growth complicates the Bank of England's monetary policy. Bank of England's Pill also added that on October 16th that he personally feels that markets have become a bit too short-term in looking at data that affects data effect on Bank of England rates, and the Bank of England has done a lot on interest rates. And then finally, the most dovish member of the central bank, Bank of England's Dingra, said that we are yet to see the effects of past rate increases. So this is a complicated scenario that other central banks have found themselves in, is where inflation remains sticky or isn't going down fast enough. Then in this scenario, if the central bank does continue to hold, but inflation isn't coming down, then there are other factors that they're obviously taking into account as well at the same time, and that being, how is the economy's health? Is growth deteriorating, or will it likely deteriorate further down the line? And then how will that affect businesses and households? And will that be enough for then the central bank, for the Bank of England, to go the other way, or decide that there is still a need to hike interest rates because inflation is still more than 3 times the central bank's target at this point in time? So I'm just going through it, Oda. Just going through what to expect for the Bank of England, just a bit of a prep and understanding of what's been said so far. So then when we do get the monetary policy statement, then we can kind of understand better what is new, what is old, and what we should be keeping an eye out for. Right, so investment bank views. So you had Wells Fargo that said that they don't anticipate an initial Bank of England rate cut until May 2024, and they see the Bank of England policy rate ending next year at 3.25%. So what that means is that they're expecting the rate either to remain on hold at this point, where it is at 5.25%, for a lot longer, for a bit longer than what maybe markets had previously been expecting from the Bank of England. Or the other way you could take it is, and of course the other added bit is that the central bank will start cutting rates maybe sooner than what the markets and economists might have been expecting, because of the UK's economic outlook and what the Bank of England could be fearing, that if they do continue raising rates, then if they keep rates high for longer, if they keep rates in restrictive territory for longer, they could do some more material damage to the UK's economy. MUFG said that the worsening on October 30th, they said that the worsening economic data has been clear and will likely be clearly acknowledged by Governor Bailey in the press conference. So again, to add to that there, that they see the officials voting for no change, like the majority of investment banks are expecting. And then Berenberg Bank coming through with comments. So Kelly and Pickering said the MPC will not close the door on further rate increases, but they added that the economy has been weaker than the bank had predicted when it set out its economic forecasts in August. So again, so you have, like I said, there are 2 things that the Bank of England is battling at the moment, with the expectation of weak growth in the future, but then you have high inflation. So they've got to try and balance it, and then they're on that tight rope line, hoping that if they keep rates of where they are, that might be enough to bring down inflation. Usually, interest rates, whenever you do raise them, it takes about a year to about 18 months to see the effects of the rate hikes that have occurred. But in this environment where we've seen central banks hike interest rates very quickly and by large amounts, you'd expect that timeline to be much shorter. And in that, then the central bank will then hope that the inflation figures from or after raising rates by big amounts or continuing to raise rates, well then they will hope that inflation will go down much quicker. So there's partly it's a wait and see, and then the other part is being reactive to what's currently going on within the economy. And then there is the fear of being too reactive to the situation of what's going on within the economy. Right. So that was Berenberg Bank, what they had expected. Then market pricing, so you had on the 21st of September, the chance of the Bank of England raising rates by 25 basis points fell to 64% from 81% before the rate decision, okay, according to the OIS curve. 23rd of October, you had traders trimming Bank of England bets and the chance of a final 25 basis point hike seen at 50%. And 24th, Bank of England, according to a majority of the people polled, of economists polled, out of 73, expect the Bank of England to keep rates on hold. 12 expected a 25 basis point rate rise to 5.5%. Can this Bank of England move the S&P too? To be honest, it's had a limited effect from what I've seen in the past. There may be, it depends on how hawkish or dovish the central bank is from the Bank of England. You're not really going to get a big old reaction from the Bank of England on the ES. But if, for instance, let's say the sentiment is at the moment, right? Well, let's clarify. What is the sentiment at the moment? Sentiment is at the moment that central banks are going to continue pausing rates, and rates are going to stay at that level for longer than what was previously anticipated. Now, if in this instance the Bank of England decides to raise interest rates instead today and surprise the markets, that could potentially have a ripple effect to the other markets, thinking that other central banks may need to do more tightening than what has already been done. So kind of echoing what Fed's Powell said yesterday in his press conference, but this is actually taking that step to then tighten monetary policy at this meeting, which would surprise the markets. And if there were to be an extra rate hike that was taken by the Bank of England after they've paused rates or said that rates are will sufficiently bring down inflation, then something's gone wrong, and in the initial market reaction could be that the currency or the pound could see a bit of a rise, or could see a bullish reaction. Stock market, stock, if we're looking at the FTSE 100, that could take a hit off of that surprise. And then also the yield or the treasury market would see a rise in yields too, potentially, from that surprise rate hike. But if everything's all the same, i.e. there's a repeat of what was previously said, and there's nothing new from the Bank of England, then you just kind of, then you might not get that much of a reaction from the markets. Instead, it's more muted. Are you hawkish today? Well, you can take that view, but this is what, like I said earlier on, with the Bank of England, you can't be so sure, because at some points you could be hawkish. I remember back in 2021, I think they were supposed to do their first rate hike, but they didn't. And the markets were hawkish at that point, and then they were dovish. And then in the press conference, I believe, then Bailey said that yes, there is a need to raise rates. Why didn't you do it then? So you can't really With the Bank of England, it's harder to know which side to kind of sit on, whether it be hawkish or dovish. So let's look at the last video that we had seen, or the last rate decision that we'd seen back on August. If we actually, well, let me bring this. Let me just bring this up. Hold on, give me a second, guys. Let me close this out. All right. Let me bring up the deviation here for you, the deviation sheet that everybody loves to see. So there we go. Bank of England rate. Because we've got about 8 minutes left. So this is the last rate decision that we have. Okay, so the deviation sheet basically shows you how much of a reaction was there to an economic release or to a rate decision that the central bank has taken. In this case, we can see here that the expectation was for a 25 basis point hike, but the rate remained unchanged. So this shows you the total deviation. Okay, that there's a 0.25 deviation compared to the forecast. And so because of that rate decision and how it went down, you can see that the pound had taken quite a big hit, actually, probably, and it had taken the biggest hit since, if we're looking at cable, the biggest hit since the 22nd of September. That was the last time we had a bigger move compared to all of this data. So for quite a while. And that's because of the surprise that had taken place. Not to say that we're going to get the same big reaction that we had last time around. And not to say that that's going to be the... Whoops. Yeah, not to say that you're going to get the same big reaction as you did back then. But again, it's something to just be aware of, that when there is a deviation with when the rate has been put out, if it is higher or lower than expected, you do get more volatility within the markets. So just to kind of cover off or make clear to how this works here, how I've made my system. So this initial figure here shows you the initial market reaction on a 1 minute candle going to the wick of the candle. Okay. And then the figure in brackets, the first brackets here, is the market reaction 10 minutes after the economic release has come out, going to the end of the candle. And then the blue colored brackets represents the market reaction 30 minutes after the initial release. Okay, again, going to the end of the candle, as does the first bracket does. So you can see that the initial market reaction was quite strong, but the pullback, you can see that it pulled back about halfway from the initial drop down that we had seen from cable. But the biggest market reaction that we've seen currency-wise has been on GBP JPY, or from what we've seen here. So about 94.5 pips down off the back of that surprise on GBP JPY. Historically, that's seen the biggest movement out of the other currency pairs within the market. Alongside, and not to kind of put it off too, alongside with the New Zealand dollar and the Aussie dollar too. They come in quite close, and then GBP CAD. And then you have Euro GBP. Then you have GBP Swiss franc, and then cable, and then Euro GBP. So the areas of the currency pairs that we're going to be looking at the most will be GBP JPY, GBP New Zealand dollar, and the Aussie dollar as well. And also GBP CAD as well. And then if we look at the the indexes as well for the FTSE 100. So you can see that there was an initial move up of about 43 ticks, and after about 10 minutes of trading, it was actually up higher than where it initially started. So it took a bit more of a climb. Took a longer time to climb up, and then after about 30 minutes, it was still up by 63 ticks. For the gilts, or the long-term gilts, that took about that had seen about 58 tick move towards the upside, and then after about 10 minutes of trading, it was flat, and then moved up again. So the key sentiment here, and this is quite useful when you're trading the rate decision, when you're looking at the deviation sheet, is looking at what was the sentiment. So again, here I write down that the Bank of England maintained rates of 5.25%, lower than the expected no change. But what was also expected, what was also added to the volatility was the split vote between members. So 5 for no change and 4 for a hike. So this is what we need to be aware of. So the expectation is for, again, a split vote from the Bank of England. Let's say the bullish scenario for the pound would be if you have the majority of members that look for a vote hike rather than for no change. Okay, that will then flip what the current sentiment is for the Bank of England to remain on hold. But if it is as expected, then you're not really going to get that much of a reaction, unless they do cite in their monetary policy that the UK economy is going to experience weaker growth, something that's been said already. So again, not really expecting too many surprises from the Bank of England, unless it's the rate and the vote split, which we need to be aware of. Okay, 1 minute to go. Right, let's have a little look here. Let's get our TICKSTRIKE set up. Okay, let's see what we get. So what I'll do is I'll work my way through the rate statement and see what was said, and then of course talk to you about it at the same time as well, or try to. Okay. Yep. 20 seconds to go. Okay, 10 seconds. No change, no change. Rate remains unchanged as expected. Okay. The vote remains as a vote comes in at 6 as expected, and the vote for a hike comes in as expected at 3, and the vote for a cut comes in as expected at 0. Let's see. They say, let's work our way through this here. Let's go through this. Oh, okay. Inflation in 2 years' time at 1.9% compared to August forecast 1.65 based on market rates. So they've raised their inflation expectations so far from what I've seen here for the 2 years. 1 year they're expecting it to be at 3.1% compared to 2.82%. Watching closely to see if further rate hikes are needed, and it's much too early to think about rate cuts. Policy likely needs to be restrictive for an extended period of time. Okay, so that's probably what's helping to keep the pound up here. So the likely need to be restrictive for an extended period of time, and the adjustment to their 1 year inflation expectation from 2.82% to 3.1%. So the initial strength from the pound there, and we'll see how long that lasts. So Bank of England's Green, Haskell, and Mann voted to raise rates by 25 basis points. Bailey said that, okay, no, that's already been said. They expect estimate GDP to be estimate GDP to be flat for the third quarter 2023 compared to the September forecast of 0.1%, and they see 0.1% quarter on quarter in 2020 Q4 2023. Inflation would return to 2% target in 2 years' time based on constant 5.25% rate and rates and mean forecast. Okay, so they forecast inflation to be 4.8% in October 2023. Or was 4.8% in 2023. Okay, so keeping on TICKSTRIKE. Let's see what we have here. Risks to inflation projections still skewed to the upside. And they also added that little news on inflation persistence since September. Okay. So just to kind of summarize then, it's the repetition of the need to, from what I can see here, to keep rates restrictive enough to bring down inflation. We'll see how long this sustains itself as well. Okay, so the FTSE 100 pairing gains slightly after Bank of England holds rates steady. All right. Okay. Okay. All right. So let's do some market reaction checks here. Let's see how strong the market reaction was. Okay, so GP USD. We'll look at GP JPY too. Actually, yeah. Let's have a little check of that because that's usually had the strongest market reaction. Okay, so not as strong as what it used to be. What we'd seen last time. So that definitely tells you that there wasn't too much of a surprise, or there wasn't really anything that new or out of the blue from the Bank of England that would be enough to reach the initial heights that they'd seen last time round for the deviations and the reaction amount on GP JPY. So here we had about 30 pips towards the upside, cable about 22.5 pips towards the upside. Let's look at the Aussie and New Zealand dollar as well, see how that's played out. Okay. It's about 22 pips there towards the upside. And NZD. Let's see what that's done as well. And about 23 pips towards the upside there. Okay. So overall, let me bring up the deviations again, actually. But you can tell from if you're looking at the ranges and deviations sheet yourself as well, you can tell that reaction wasn't as strong as what it was beforehand. So, actually, you know what? Why don't we check the S&P too? I don't think it's going to have any reaction to this if this is how the market has been playing out so far. So, this is 8. That's 8 o'clock there. So to be honest, nada, nothing. But yeah, if we're looking at the deviations, let's keep that there with GBP JPY. Sorry, you might be able to see this. Okay, here we go. All right. Go there. So GP, JPY last time round. Yeah, definitely not. So a more muted reaction this time round with the Bank of England. Okay, so your question may be, how do I get my hands on the deviation Google Sheet? Yes, we do have non-farm payrolls tomorrow, so we'll be covering that as well. Actually, and let me get the link to that so you can join in. You can join us for that too. But yes, how do you get your hands on the Google Sheet deviations? Well, all you got to do is sign up to the MacroAce mailing list, which is completely free. Okay, and not only do you get the deviations sheet here, completely free, and also live in real time. You'll be able to see me edit and update it. You also get a short summary in an email detailing what to expect for the week ahead in Asia, Europe, and the US. It's a refresher. It's not filled with tons and tons and tons of text or any line graphs or charts. It's supposed to be a refresher. And then, of course, in the live streams, here is where I talk to you about why the sentiment is the way it is, and what else to expect within the markets. So that's the MacroAce, the mailing list there. As I said, you get a link to the live streams as well, and also the deviations, and you get a summary as well too. Okay, so I've put that link there. Let me close that window for you now. Now, FinancialJuice. So we have a very special offer so far. So if you want to stay up to date with the latest news and be on the bleeding edge of news for not only financial news, but of course non-farm payrolls tomorrow, then sign up to get our special offer of FinancialJuice Pro for a year's worth of our service for the price of 1 month and save 92%. And you can do that by going to the link here. If you go to first of all, I'll give you the link to the FinancialJuice newsfeed, okay? Because you will need an account first on FinancialJuice, verify your email, and then you can go to, there'll be like a button here in the top left-hand corner. You see where I'm clicking the switch there? There'll be a button here that says Go Pro. On the this is the FinancialJuice newsfeed with your live voice and text service. Okay, so here there'll be a button that says Go Pro, and then there'll be the option for the $99 for the year rather than a month. And then once you've paid for that subscription, all you've got to do is log out and then log back in, and then you would have then been signed up, and you'll get the pro version of FinancialJuice. All right. So let me talk to you guys about what FinancialJuice is, so to kind of make sense of this. So FinancialJuice, as said, is a live voice and text service, keeping you up to date with what's going on within the markets, or what's going on with the world as well, geopolitical events, all in live and real time. Okay, so the rate decision was done by our fabulous Ben, who read out the rate decision and the headlines for you all in real time, and then you're able to kind of take that, of course, if you listen into it live in real time, you're able to make those quick decisions where you need to make those decisions. So here is the voice feed there. So I've just clicked the button there. This is the live voice. You can see it kind of going off, and James is currently speaking on the microphone now. One of our analysts, and here in the middle you've got our news feed here of the text headlines. Again, this is all live in real time, keeping you up to date with what's being said, what's happened. And on the left hand side here you have the economic calendar as well, okay, giving you an up-to-date view of what to expect for the day ahead, or the week ahead as well. So that's FinancialJuice there, again providing live a real-time voice and text service, keeping you up to date with the breaking market news and moves that are occurring, or news that could affect sentiment as well, all in one place. So again, if you're a day trader, FinancialJuice is the perfect platform for then to be able to keep up to date with what's going on within the markets and what's being said, to then to be able to capitalize on those potential opportunities. So I'll pin that there. And again, that's there for you. So then finally, let's look at TICKSTRIKE. So TICKSTRIKE, if you guys are not familiar with it, or if you are familiar with it already, you'll know that it allows you to monitor, keep up to date with how strong is the buying or selling momentum within the markets. Okay, and with TICKSTRIKE, this box here is called the ticker box, and this represents the. Let's bring up on. Actually, let me bring up GBP JPY. Here we go. Let me bring that up here. So this represents your. So with TICKSTRIKE, you can monitor the strength of the buying or selling momentum within forex, crypto, stocks, futures, ETFs and ETNs, and also your internals. So if we're thinking about the VIX index, you can also monitor that as well. Okay, so with this little box here called the ticker, representing GPJPY. So here you have this number and a minus figure. This number represents the sensitivity level going from 1 to 15, all the way to 15. And the minus figure shows you the selling momentum. And of course, on the flip side, with the plus symbol will show you the buying momentum. Now, 1 on this figure here is the most sensitive to market reactions. So when there's a lot of buying or selling momentum, then TICKSTRIKE will give you a visual and audio alert as to what's happening within the markets. Okay, just as it's doing now here. Of course, you can kind of pick and choose what works for you, whether you have audio or visual, or you have both. And then as you increase that level all the way to 15, 15 is the least sensitive to market reactions. So only when there's a big amount of buying or selling momentum for TICKSTRIKE to be triggered, only then will TICKSTRIKE give you a visual and an audio alert, or whichever way. Okay, and so this is again another tool for day traders to be able to use in their day trading strategy. And if you're scalping the markets, well, it's time to go turbo mode with our lightning. If you press this lightning symbol here, this represents. So remember I said 1 is the most sensitive to market reactions and usually kind of goes off all the time. Well, this is going 15 levels below 1, so then it is uber sensitive to market reactions. So if I just take my mouse away, you can see that every little bit of buying or selling that's happening will then be presented here on the Uber version of TICKSTRIKE with the lightning symbol there. Of course, the same thing, you can kind of chop and change it. 1 now becomes, you could say, minus 15, and then you take it all the way to, let's say, 0 here, and then that becomes more or less like the unticked version of TICKSTRIKE to around the initial level of 1. So again, uber sensitive to market reactions with the lightning bolt, and then you have your normal TICKSTRIKE version. Okay, so the link for that there is here in the. I'll just put it in the chat too. So remember, as said, we have tomorrow we have non-farm payroll. So let me get that video out for you too. Also, don't forget, if you like the video and enjoy the content, don't forget to give it a like, subscribe to the channel, hit that notification bell icon on the video, and stay up to date with us. Let me get the non-farm payroll live stream for tomorrow for you guys so you can see it. Here we go. There we go. All right. So that's the live stream there for tomorrow. Matt says, what's the best way to learn fundamental analysis? Best way to learn fundamental analysis, it is using a voice, a live voice and text service. But if you're not ready to, of course, if that might be actually no. Let me take that back. Okay, that's not correct. The best way to learn about it is, first of all, start off with the economic releases. Understand what does each economic release mean, and how can it affect the markets. Then what you want to do next is then you, at the same time, you want to kind of keep an eye out on the news that comes through. Okay, it doesn't mean you have to go for the live pro version. There's when if you're not ready to, if you're just trying to learn the ropes, there is the light version of FinancialJuice that you can have a look at. Okay, on the light version, there's going to be a delay and you might have adverts playing, but at least you get a sense of how fundamental news can have an effect on the markets. And then from that, you can start to learn what sentiment is. What are markets focusing on? First of all, what is sentiment? And then when you're looking at the headlines, you can understand what are the markets focusing on. And you'll understand that the markets are going to be focusing on a bunch of different things all the time. Or maybe for one thing, for a sustained period of time. So it's difficult to try and pin down and get used to, but if you can do that effectively, to understand initially economic releases, then the news, and what the sentiment is, just keep practicing and understanding those things, and then you will hopefully have a better sense. I'm still learning. If you're not learning, then you're doing something wrong. So if you're a nerd-all, well, just go on. Why are you here? I kid. I joke around. All right. Thank you very much, ladies and gents, for joining me for the live stream today. I will see you guys tomorrow for non-farm payrolls. And I will, catch you then. So that'll be at 8 a.m. Eastern Time. I'll be around for non-farm payrolls. Okay. See you guys. Bye.